Hello traders, Robert here with your Parallax Weekly FX Market Update. So last week all eyes were on the CPI numbers, and for me that was Tuesday early morning, which is this candle right here. And it certainly gave us the move we were expecting. It shook up the market in a very expected way. I think it was down over a full percent for a single day, so very atypical there. So we got the move, but even better is now we have a much better idea of the overall direction of the US dollar. I think last week's price action gave us much more clarity for the wave count and what the US dollar wants to do moving forward. So if anything, we can move our invalidation down to what I think is the wave 2 here. But ultimately, this move, of course, was caused by the lower than expected inflation data, kind of confirming the general expectation that the Fed kind of has reached the peak rate, and that kind of suggests that a rate cut is going to be in the future. So again, dollar index, of course, represented that mindset, that energy with a big move down. Worst day of the year. And now we have a much clearer idea of the direction this chart wants to go. Last week it seemed like the big question was, what's the dollar going to do? I remember we looked at the index chart, we looked at a few of the dollar pairs, and at the time we saw this kind of price action, pretty choppy, pretty overlapping, corrective looking in nature. But now it looks like on the back of the CPI numbers, we have a much more clear direction. This wasn't a correction of some kind. I think we can much more confidently count this now as a unfolding sequence of 1, 2, and of course a second smaller 1, 2, 3, 4, 3. So I anticipate wave 3 to end sometime, maybe next week, perhaps. I don't have a strict price target set quite yet. Perhaps soon, and then of course a bounce in wave 4, and then one more push down to complete the first 5 wave sequence of what very likely could be a much more higher time frame move. So it looks like dollar weakness will be the name of the game moving forward, at least for the foreseeable future. And we can confirm that with some of our dollar pairs. I still like, for example, Australian dollar, US dollar. I do like that to the upside. I still like the price action here, very choppy, overlapping. For those of us that practice Elliott, this is an ending diagonal pattern, or just strict technical analysis, this could be a descending wedge with momentum divergence. So overall, I'm liking how the dollar pairs seem to confirm, right? And of course, euro US dollar is the majority of the index, so these charts will just be more or less an inverse of one another. So we can see the 1, 2, 1, 2 pattern developing here for the next impulse to the upside. Again, I'm still not entirely confident on my pound count. Dollar CAD, I do anticipate at least one more move down. And a couple other charts. Dollar Swiss. Dollar Swiss I think is interesting and should be on the watch list for the coming week or two. And that is because we have a nice impulse up. Very sharp move, not a ton of overlap. We broke a couple significant prior swing high points. And now we're descending in the 3-wave A, B, C. And if we dive in a little bit deeper to this degree, wave C, in my green count here, it looks like it may be completing, or completing very soon. We have a nice 1, 2, 3, perhaps a choppy wave 4 here. Either way, I anticipate one more push down, ideally to test that 61A retracement level, before bouncing up and tracing out wave 3 of this degree, the parentheses degree. And that should be a nice move. So if we do get that price action, then the decision, of course, then becomes how aggressive do we want to be? Do we want to enter on the break of wave 4 of C? For the more aggressive traders, that might be a decent option. For the more conservative among us, perhaps we wait until we break the high of the wave B and target the entirety of this wave 3. No right or wrong answers there, just a couple options to consider when looking at this chart. Dollar yen, I believe, did break our invalidation level. So I believe a lot of people had been looking for this to be an impulsive move down and this to be a very steep, very sharp correction. But I believe the high here is about 151.94, and some of the highs here 151.91. Okay, so perhaps by a pip or even a fraction of a pip, this count could still be valid. However, I think at this point it makes the most sense to try and find an alternative count. And for me, the price action still is quite messy. I don't see a trade immediately setting up. I would want to see an impulsive move in either direction first. So perhaps that's what we're getting now. 1, 2, 3, 4, 5. And if that's the case, then I'll wait for a three-wave correction and then decide perhaps going short makes the most sense here. But nothing super clear on the yen patterns quite yet. Kiwi yen perhaps taking a short here. If we break this wave 4 of the ending diagonal, that could be worth taking. And as far as the cross currencies go, I don't see a ton of things setting up. Again, we've been watching Euro Aussie to break this triangle pattern. Still haven't quite made it there, so we'll keep an eye on that as well. Pound CAD still seems to be chopping in a wave B. I still like this as a corrective move. It's getting a bit steep. We're at probably about a 78.6 retracement at the moment. However, this move does seem quite sharp, and this is a bit more choppy, a bit more overlapping in nature. So I'm still keeping an eye on a corrective move here, and then one more push down. But we'll see. And other than that, not a whole lot of cross currencies I'm looking at. So in terms of news, last week was the busy week, and almost the complete opposite. The following week should be a slow week. There's not a whole lot in terms of important market shaking news I would say you should watch for. If you have any Canadian dollar trades, perhaps Canadian CPI numbers might shake things up a bit. That's Tuesday morning again this week. But as far as the US dollar, of course, Thursday is the Thanksgiving holiday. And I would say most, if not all, traders will stop trading Wednesday and just take Thursday and Friday off. So just keep in mind, most people, most traders, most banks will be cleaning up their books and quitting the week on Wednesday. So likely Thursday and Friday will be very low volume days. So I would advise against maybe opening a new position on one of those days, because likely price isn't going to go anywhere. I would just take the 4-day weekend as well. But other than that, I don't see anything else too terribly important to keep an eye on next week. Again, holiday week, so it'll be quite slow. Just keep an eye on your trades. Again, any Canadian dollar trades, watch Tuesday morning. But next week should be fairly quiet compared to this week. So, all in all, short update for the week. Thanks for joining us, and we'll catch you in the next one.